Hello boys and girls, welcome to the Dow Academy online learning. We look forward to seeing you all back in class, but for now, stay home, stay safe, and remember to always wash your hands with soap for at least 20 seconds. Let's begin.
Hey students, we are going to discuss errors not affecting the trial balance. What it simply means is the trial balance will still balance even if the errors occurred. There are 6 errors not affecting the trial balance. We should be able to explain the errors, identify the errors, and correct the errors. The first task we are going to do is explaining the errors before we look at the correction of the errors. The first error is the error of omission. As the name states, what is an error of omission? An error of omission occurs when a transaction is completely omitted from the books of accounts. It means there was neither a debit entry or a credit entry. Thus, the trial balance will still balance. The second error is the error of commission. An error of commission occurs when a transaction is entered using the correct amount and is recorded on the correct side but on the wrong account of the same class. For example, when you record in accounts of debtors or when you record in accounts of creditors. This usually occurs when names are similar. For example, say we have Kaone's account and we also have Baone's account. And instead of recording in Kaone's account, we record in Baone's account. Then the third error is the error of principle. What is an error of principle? An error of principle is similar to the error of commission, but the difference is that a transaction is recorded using the correct amount and on the correct side, but on a wrong class of accounts. For example, when motor expenses are debited in motor vehicles account. Motor expenses are an expense account and motor vehicles are an asset account. So those are different classes of accounts. The fourth error is the error of original entry. As the name states, it means the error occurred in the books of original entry, our journals, or what we also know as our daybooks. This occurs when an incorrect figure is used when a transaction is first entered in the books of accounts. Those are our books of original entry. And double entry will be followed using the incorrect figure. The trial balance will still balance because double entry was followed using an incorrect figure. Let's look at the fifth error of not affecting the trial balance, the error of complete reversal. As the name states, this occurs when a correct amount is entered in the correct account, but an entry is made on the wrong side of each account. An account to be debited was credited and an account to be credited was debited. That is an error of complete reversal. The last errors are compensating errors. Compensating errors, these are errors which cancel out each other. Though this is rare, but it can occur.